I'm Maloni Bhatt. Today we are going to talk gold, the shiny metal that we in India love so much and buy every year during festive times as a mark of celebration on our birthdays and wedding anniversaries. No wonder we are among the top consumers of gold in the world. Gold prices are under pressure. Now, may be good if you want to buy it, but it also means that the value of the gold then that you hold perhaps is not doing so much for you. And then when you look at it in terms of investment, well, that's really when the questions start to come up. What should your strategy be when it comes to investing in gold? What sort of gold investments offer return? Now, we have just the speakers to help us make sense of this. And the topic today that we're going to tackle is future of gold investing in India, outlook and trends. And I'm very happy to welcome Santosh Joseph, founder and CEO, Germinate Investor Services, an investment services firm. Santosh, good to have you.
Hi.
Next, we have with us Ghazal Jain. She's fund manager, alternative investments, quantum asset management company. Welcome, Ghazal.
Thanks.
All right, Santosh, let's begin. And I want to start with you first. Data shows that gold has clocked in a return of about 3.5% in rupee terms in the decade gone by. Now, with inflation for the month gone by hitting 7.4%, the data's just come in. Should you even look at gold as an investment tool?
I think if you ask me personally, I would see it as a great opportunity because when you look at almost a decade of returns, that 3.5% is something that is not very enticing for investors to consider making an investment in gold. But when you look at gold from a slightly more zoomed out perspective, gold performs in patches and in big form. So you always have not these 7-8% consistently, but you'll have 1 year where you get the 20, 30, 40% return, and then rest of the time it just evens out. Now, when you look at this 10-year period that you're talking about, it's not an enticing factor for investors to consider. But having said that, you need to look at the bigger picture that gold needs to be a part of the portfolio. And you get the benefit of getting this at this opportunity right now because the last 10 years have not been great. But sometimes, there is a great opportunity to grab in more because this is telling sign that you have a great upside opportunity ahead of you.
Okay, all right. Ghazal, globally, gold prices have been a bit down, right? Since the beginning of this year, they have been weighed by a rapid interest in rapid rise in global interest rates, surging US dollar. Would you say that the current market environment, as Santosh has pointed out, is a good time to be invested in gold?
If you look at the current macro environment, inflation in the developed world continues to be at record highs. Even though inflation has moderated a bit of late, it is far from central bank inflation targets. So yes, Federal Reserve, other central banks are expected to continue tightening in the near future. And in response, gold's nemesis, so to say, the US dollar and US Treasury yields are going to be strong. But if you see the numbers, like the US 10-year Treasury yields, for example, have moved up from -1 to +1.5% in real terms in just a matter of 6 months. And in spite of this, gold, which is a non-yielding asset class, hasn't corrected proportionately. Right. In fact, in the first 9 months of this year, gold has given returns of 5% in rupee terms. And it has partly compensated investors for negative returns in equities and paltry returns in bonds. So this indicates that there is a presence of other positive factors, So what exactly is supporting gold? The world is in the midst of a war. Inflation is at multi-decade highs. Financial markets, are volatile. As global liquidity evaporates, there's a good chance that the global economy will enter into a recession within the next 1 to 2 years. We're seeing that central banks are finding themselves in a conundrum. Raise rates and risk a recession, or leave them low and face the wrath of inflation. So I feel it's hard to imagine a more ideal scenario for gold. Right. Also, there are other systemic risks on the horizon. So, coming to India, I would like to answer this from an India perspective. While the domestic economy is looking robust, Indian equity markets are vulnerable to geopolitical developments, oil prices, capital outflows, rupee depreciation. There's so much actually happening on that front. So, I would say that in this period of synchronized, global monetary tightening, this will be a challenging period for all asset classes, equities, bonds. But risk assets like equities and bonds, have the potential to suffer more, making gold relatively better placed. So in answering your question, in today's scenario, yes, it is a good time to invest in gold, but it's important that investors look at gold from a returns, less from a returns perspective and more as a portfolio diversifier. And given
Oh,
that prices have corrected off late, I think now is a good time for investors to start accumulating.
right. So when you say of looking at it less, as a portfolio diversifier and less from a return perspective, what's the time horizon, that you suggest investors look at? Because I'm sure investors, when they invest also, not of course when it comes to jewelry or something like that, because that you may buy for passion or for whatever reason. But otherwise, some investors will look at gold as an investment.
I think it's important that we look at gold from, as a strategic asset class, as a long-term asset class, just like how we look at equities, right? Because I mean, every time, say, there's economic distress or stock markets go through a troublesome time, we see investors run to the safety of gold, right? This really doesn't help. What really is important is that, you have gold as part of your asset allocation, as part of your portfolio from a long-term and strategic point of view. And only then I think you'll be able to actually enjoy its benefits as a portfolio diversifier, instead of tactically chasing the asset class every time equity markets are going through a tough run.
All right. Santosh, taking from where Ghazal has stopped, in India, there is a demand for physical gold, right? Like it's part of our culture. Versus what I spoke about a little earlier about gold as an investment class. Now, what is sort of interest that you see in say both over the next, and I'm looking at it from a short-term horizon and definitely not as, as Ghazal has pointed out, to look at gold as from a long-term perspective, but say over the next 6 months to a year or two, given that interest rate hikes are likely to continue, over the next few quarters.
Well, let me just add a little more to what Ghazal just previously said. Now, as far as the portfolio concerns, and when you add gold into it, there are two additional tangible benefits. And let me break it down this way. If you take March 2020 and March 2022, these 2 months actually highlighted the way gold performed. Both the Marches of 20 and 22, gold gave an average 15 to 25% return in just that 20, 30 days time. Now, you can't buy gold in that particular period when gold flares up. You've got to be present in gold before so that you get the benefit of that flare up. Now, anybody who saw that flare up and bought gold has suffered for next 1 or 2 years because you'll never get the prices back. For example, in March 2022, when the Russia-Ukraine conflict was at the peak of its news, gold had gone to well over $2,000 and now it's back to $1,700 or below $1,700. So if anybody bought at $2,000, you'd have got stuck, which means don't chase returns, buy it before, which means it has to be a part of your portfolio even before you expect some movement in gold. That's one. Number two, at a portfolio standalone basis, when you have gold as a part of the portfolio, it drops the standard deviation of the portfolio. Now you've got equities, you've got bonds, you've got cash, and all of them have risk reward ratios. Gold sort of evens out the risk reward of the portfolio. Now, coming back to your question, how does it play out in spite of inflation being at 7%, both on the investment side and both on the jewelry consumption side? Now, it's a known fact that India is one of the largest markets in the world for jewelry consumption. And that number varies between 50 odd percent plus or minus 5-10% here or there, depending on the year we are in. Now, we can't take away the fact of the big fat Indian weddings, the jewelry requirement at occasions, and also with the growing purchasing power that we are having as Indian consumers, there is going to be a need for higher consumption of jewelry. Now, the jewelers are going to be smart in terms of their products and their offerings within that space between daily use jewelry to 18 karat to diamond and 14, and all those things will happen. But there's no taking away the fact that jewelry demand is going to grow, irrespective of the price of gold, right? That's because of our disposable income. Our festivals don't stop. Our weddings only get bigger. In fact, you look at any wedding, anywhere between 20 to 30 or even 40% of the cost of the weddings is the cost of jewelry alone, which is gold, right? Mm-hmm. Now, that demand is going to grow. Of course, the year 20 and 21 may be a little bit of a blip because wedding season and gatherings had reduced. So therefore, the need for jewelry had reduced. But I think that's just a small blip. Now, coming forward, that even though we see inflation sticky and being at a high, the consumption for jewelry is going to continue because people are going to see inflation even in the price of gold as a reason to buy ahead of time. A typical household will say, if gold is going to go up, let me buy it today. Or if gold is available at this price, let me buy it before it goes higher. Nobody waits to buy gold saying, let it fall down further, I'll buy. That's only an investment thought process. Now, from an investment perspective, to be a little careful at the entry point of time. Like I said, avoid the marches. Be prepared for a march kind of a scenario so that you're invested before and not after. So on both these counts, I think from an India perspective alone, there's a great advantage. And not to forget, for an Indian investor, having gold is a direct benefit of the dollar appreciation and rupee depreciation. So when we spoke about the 10-year return being 3.5, most of it has come because of the rupee depreciation against the dollar. So today, if you and I own gold, we're indirectly having access to the dollar asset.
Okay, no, that's a fair point. Ghazal, to you, the general relationship between gold and equities is an inverse relationship. Gold prices go up as prices in the stock markets fall. Now, it has been observed that when the stock market is pessimistic, gold performs well. Over the past couple of months, gold ETFs have been witnessing outflows, despite the equity markets being volatile. Now, give us a sense of why this is and what is the advice to investors? How should they strategize in the interest of their portfolios?
So yes, that's right. Historically, gold has performed well in times of stock market stress. I mean, we can take 2001, we can take 2008, 2011, 2020, 2022. I mean, gold has really, done what it actually stands for in all these testing times. And now coming to the now in 2022, gold remains relevant. Again, the risk aversion and volatility that we're seeing thanks to the war and inflation, etc. So I would say this mix of competing macroeconomic and geopolitical factors and their unpredictable impact on financial markets isn't special to say 2020 or 2022. I mean, it's the way things have always been and will continue to be. Yet investors time and again rush to gold in times of stress and then discount the metal when the dust settles, and they're not appreciative of the always lingering risks and gold's ability to thrive amid those. So coming to the ETF outflows, like you mentioned, so yes, the category has seen outflows, in July and August. Again, typical investor behavior, wherein tactical investors tend to move out of gold when equity markets are doing well, which was the case in these 2 months, right? But in contrast, if you see, gold ETFs saw strong inflows in the preceding months, March, April, May, June, right? And now again in September, gold ETFs have attracted flows of 300 crores plus. Why? Because equity markets were down. So I would say going forward, if volatility continues in equity markets, which is likely given the aggressive tightening by global central banks, gold and gold ETFs could see renewed interest. So answering your question as to how investors should approach gold as an asset class, again, view it as a strategic portfolio asset instead of chasing the returns and trying to time your entries and exits. And just to give you a sense of how the growing acceptance of gold ETFs and how this asset class is gaining traction on a YTD basis, gold ETFs have seen inflows of close to 800 crores and addition of 14 lakh new folios, right? Gold is the best performing asset class this year. So
nothing more to be said. Yeah, that's what you're saying, Ghazal. Santosh, to that point, when it comes to ETFs, how do investors choose? Which is the best one, which is the right ETF, that they should invest into? What are some of the things that people should be considering?
I think that's a good point, that when people love to buy gold, there are various methods to it. Like, for example, the age-old method was you buy jewelry. Now, there's only that much limitation that you can do with jewelry, and people move towards buying coins and biscuits. Now, why did this happen? Is because they know that when you buy jewelry, there was a little bit of a wastage between the jeweler and the actual gold benefit in terms of making, wastage, breakage, refund, exchange, all those. People got smart. They said, hey, let me just buy the gold bullion, which is in either the 24 karat biscuit or the 22 karat coins. Then they realize, hey, how am I going to store it? Right? I can't keep it at home. There's a flight risk at home. There's a robbery risk and theft risk. And also, why do I have to? And I can forget. All those issues were there. So the digital way, and we should not confuse this with digital gold. The online way of doing this was ETFs. Now, an ETF is available in a most liquid format in the stock market, where it's so easy to buy and sell, and also to comes and sits pretty comfortable in your demat account, where not only is it easy to buy, easy to sell, it is also convenient to hold, and there's literally zero cost to buy and hold, but for the little brokerage that you pay. Now, there are also today, based on the ETFs, a lot of funds available by the mutual fund industry, where they're saying, listen, we know not everybody is conversant with an ETF as a format. Not everybody wants to go and open a demat and trading account and know how to buy or sell. And it's also not very convenient to do an SIP in an ETF. So they did the fund of fund concept, which is the mutual fund takes the role of managing it for you. And then they brought down the SIP concept, investment concept, and monthly investment, all the features of the mutual fund, which worked so well for equity or debt investing. They even gave it to equity, gold. I'm sorry. So today, gold has got the benefit of even doing a 500 rupees, a 1,000 rupee SIP, where you can't even afford a gram for that price. So ETF or gold funds can be looked at investors depending on their convenience and savviness. I know there are many people who directly come into ETFs because today opening a demat account and trading account is the most easiest. I recently was doing an article where in the last 2 years, you have the most amount of demat accounts open, to the point that 50% of all demat accounts present in India today are open in the last 2 years, effective March 2020, which means more number of demat account holders and trading account holders, which means you can buy more ETF. Even if you were to negate that thought, you have enough action in the mutual fund of fund space where people do buy it, which eventually goes back into ETF. Now, when you look at an ETF, ideally, expense ratio, size of the fund are two things that you look forward to, because eventually it's all going to be held in some safe vault somewhere where the physical gold is bought and kept for you on behalf of you, and the upside of that is provided in the day-to-day price activity that you see on the ticker.
All right. Santosh, any insights into, which segment of the population is actually into ETFs in India?
There is this segment which is two. One is the HNI segment, which they know gold has to be a part of the portfolio. And they are the ones who straight away go and buy the ETF format and leave it in their demat account. And this held for a really long time. They don't come for 1 or 2 years. They know 5 or 10% of the portfolio has to have this kind of a metal into their portfolio, and they buy it and leave it because costs also support them. Now, there's also a growing number of middle class and retail people who want to buy gold, and they're done with their jewelry demand, or they say, no, jewelry is not investment, that's consumption. For that, they are now using the fund of funds, or some bit of people who are having technology usage access are directly going. There are hundreds of online platforms today that help you buy ETFs so easily, and even the ticket sizes are very small, and so it's very convenient. So instead of buying, let's say, any gold ornament which is typically between 40 to 60,000, the same quantity you can buy pure 24 karat gold by taking delivery in your demat account.
Ghazal, I want to bring you in, linked to all of this buying by HNIs, also by middle class. What about the millennials, the Gen Z? How are they what's their relationship with ETFs and digital gold? Is it boring? I mean, and what is the kind of advice that you would give this section?
Most seasoned investors either already have sufficient allocation to gold or maybe using the recent price correction to augment their exposure, because, they've seen many economic cycles and, market ups and downs over the years, and they need no convincing about, the wealth enhancing, risk mitigating, stabilizing role that, gold can play in a portfolio. But coming to millennials and Gen Z investors, well, the numbers show that many of them have started investing, in the COVID era, and they've started parking their savings in mutual funds and equity assets, to be specific, which is a great start. But, with the glorious rally that equities have seen over the last couple of years, it's understandable that they don't find gold interesting enough, traditional, boring. I mean, if that's how they're looking at it. But I feel maybe they haven't been around long enough to witness gold's many benefits. I mean, portfolio diversification, we've spoken about that. Its inverse relationship with risk assets, and negatively correlates with whatever the economic situation is looking like. Also, it's a great preserver of purchasing power or store of value, right? I mean, over the last decade, annualized rupee returns from gold have been around 10%, and during the same period, CPI index is compounded at about 6.5%. So over longer periods of time, gold prices, keep pace with real increases in cost of living. So I mean, these kind of strategic benefits that gold bring to the table. I mean, I think this would be a way for me to bring the younger generation in, and I think my advice to them would be twofold. I mean, you may not see eye to eye with your elders or parents on most things, but when it comes to investing, it may be a good idea to appreciate gold's long track record. Pay heed to your parents and invest up to 10, 15, 20% of your portfolio in the precious metal, right? Lastly, I would say that because this generation is more informed and technologically savvy, they should ideally improvise how they go about investing in the asset class. So, I mean, a foray into physical gold would at the minimum require an investment of 1 gram or approximately 5,000 in today's prices. In contrast, they can start investing in financial forms like gold ETFs at 0.01 grams. That's it, which amounts to just rupees 50. And gold ETFs, again, you don't have to be worried about the purity of gold. That is mandated. They invest only in 24 karat gold, right? They also give you the benefit of wholesale prices. There are no inefficiencies like making charges. So they optimize your investments for you. And lastly, I mean, the younger generation likes to do everything online, so you can just quickly, from the comfort of your home, buy, sell, liquidate your position in gold ETFs online. So yes, I think this would be my twofold advice to the younger lot.
If I hear correctly, are both of you actually advocating? Maybe advocating is too strong a word, but actually saying that ETFs is a better investment strategy than actual physical gold. Have I interpreted that right, Ghazal?
Yes, definitely. Yes. I mean, if the various things that an investor should consider when they're looking at something as an investment, gold ETFs meet all those criteria. Physical gold, in a sense, I would say, is more for gold consumption, right? When you want to say buy jewelry for or I mean, or things for like gifting, that's when physical gold meets those requirements. But if you're really looking at it at a long term, as a long term investment, you need to move to more efficient and financial avenues like gold ETFs.
All right. Okay. Now I have the last set of questions for the both of you. Santosh, we're witnessing inflationary pressures. There's also this whole thing about erratic monsoons. There is indication that it'll hurt the income of farmers. It will reduce the purchasing power of the biggest buyer of gold in the country. Rural demand accounts for some 60% of India's gold consumption. What is your forecast for the offtake?
Like I said, the short-term blip is just normal. I mean, whatever happens, for example, the bad monsoons or the sticky inflation or even anything intermittent that can come by in the next 2 or 3 months can upset the apple cart. But what is important is the psyche of the people who go and buy gold. They buy gold for multiple reasons. Like you and I, they don't have the luxury of having this conversation whether gold should be an investment demand or gold should be consumption demand. They are
Yeah,
seeing
quite
it very unilaterally. I want to get gold. There will be a point of time where even that segment of the audience will say, no, listen, how much gold will I hold? There's only that much, and then I'll buy ETF or in the digital form. Till such time, they are going to be looking at gold. See, like you and I are talking about sticky inflation and worrisome concept of range. They may actually go and buy even more gold than anticipated because they're worried and they want to keep their money safe. So those things do tend to play out. And normally when you stretch the time frame between 3, 6, and 9 months, it will just all even out. Now, most of them know that between equities, bonds, or cash, or all these things, and we've also had a history of demonetization in our country in the recent past, that the golden rule of investing is to have gold in your portfolio. Right. So therefore, though we may be debating and assuming how things will pan out, I think at the ground level, people may consider gold in a different fashion than what we are debating over here, and they may actually end up going and buying more. But don't forget, there was 2 years of lull where less festivity, less gathering, and less weddings were happening. And now, even though we don't have an economic conducively environment right now, but still, you don't need a reason to buy gold.
So you're anticipating a real surge in demand?
I think so. So the surge in demand may not come in on the Dhanteras day or a Diwali day or maybe for a particular holiday or a particular season, but I believe that structurally the demand will pick up.
Now, my last question, Ghazal, is to you. It is something that you indicated, in your response previously. Rupee is testing a new low, right? Especially followed by the Federal Reserve's big rate hike. Now, since a large chunk of our gold demand is met through import, what will be the impact of a weakening domestic currency on gold investment? And also if you could chime in to what Santosh has spoken of in his previous response. Now, given the festive and the wedding demand, what is the outlook for gold prices in India over the next few months?
About the rupee, I think there are a couple of factors weighing on that. Of course, the U.S. Federal Reserve unwinding its easy money policies. It's going to keep strengthening the U.S. dollar relative to other currencies, including the rupee. So that is taking a toll. Higher interest rates in the U.S. Have been triggering capital outflows in Indian markets, hurting the rupee. Also on the current account deficit front, higher oil and commodity prices, they've kept the pressure on the rupee. So I mean, currently rupee is at around 82, and the current account deficit could go beyond 3%, the 3% comfort level soon. So there are a lot of factors at play here. And I mean, FII outflows have moderated for now, but the uncertainty on commodity prices, capital flows, and volatility in rupee is likely to persist in the short term. But if you see, compared to the dollar, Indian currency has weakened by about only 10% this year because the central bank has been intervening with, dollar sales. But, on the other hand, this has, depleted its forex reserves and limited, its intervening capacity going forward. So downward pressure on the rupee, according to us, is expected to sustain, especially if the dollar strength continues the way it has. And depreciation in the rupee will support domestic gold prices. Most of the gold returns in rupee terms this year, like Santosh pointed out, is on account of the rupee depreciation, in fact. Lastly, coming to the festive and wedding demand, yes, a lot of indicators showing that the Indian economy has been robust. Physical demand is coming back in a big way post the 2 years of COVID and lockdowns. So yes, festive and wedding demand in this quarter of the year should also support domestic gold prices.
All right, so Ghazal and Santosh, it looks like a happy Diwali for all of us. Thank you so very much for giving us your thoughts and giving us your inputs and helping us understand the value of gold as a diversifier in your portfolio and the value of it as an investment asset. Santosh Joseph, founder and CEO, Germinate Investor Services. Ghazal Jain, fund manager, alternative investments, Quantum AMC. Thank you so very much for your time and for your thoughts today.
Thank you.
Thanks.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.